Are alive, keeping out for you to think later. Well, our next group of speakers are going to be discussing about tokenized markets and alternative assets, unlocking new frontiers for investors. Please welcome our moderator, Charles Ducey, CEO of dYdX Foundation, in conversation with speakers of Afi Invest and Apollo. Please welcome them.
Good to be here. My name is Charles Ducey. I'm the CEO of the dYdX Foundation. I also co-created the Hong Kong FinTech Week 10 years ago. So I'm back in town to celebrate the 10th anniversary of the Hong Kong FinTech Week. So happy birthday, everyone, and thanks for being part of this journey. I'm joined today by Christine Moy and Jean-Pierre Grimaud, and we're going to talk about tokenization. That's a word which many people use, but we have the chance today to be joined by people which are practicing minting tokens of real-world assets, distributing them, having conversations with regulators, and really being at the heart of this new trend in finance. So Christine, your partner and leading digital assets and AI at Apollo Management. Apollo Management is a very large firm which in June 2025 was recording $800 billion AUM. Before joining Apollo, you were with JP Morgan, and you've been a crypto nerd, if I can call you this way, for quite some years.
Real-world assets tokenization is my life's purpose, my life's work over the past decade.
That's what I like to hear. Jean-Pierre, you're the CEO of Afi Invest, a leading French asset management group with $200 billion AUM. And in 2018, so it's to give you the amount of and a sense of how much experience there is on this panel today. In 2018, you were the first to tokenize funds with a project called Isness in partnership with Société Générale. So a lot of experience over there. So thank you for joining us. I'd like to start with this tokenization trend. Both of you are involved in this kind of upgrade of the infrastructure, and you might be tokenizing private credits or real-world assets in general. What kind of change of behaviors from the investors? And maybe we'll start with you, Christine. Do you feel this technology opportunity is something which is pulled by the investors today? Is it something which is still finding its ground? Tell us a little bit the journey maybe at Apollo, and how does the market respond to this new way to consume your offerings?
Yeah, definitely. I mean, I'll just start by saying that obviously the three of us have been working on tokenization of real-world assets for over a decade almost, right? Collectively. And from my observation, I feel that we are now at an acceleration point, an inflection point where tokenization will really start in earnest. I know that, for those of you that have been in the space for a long time, like you also have heard that before, and maybe you're skeptical because there have been so many times in which people have said, like, now institutional adoption is here, now like tokenization will happen, and it actually hasn't really happened in a real way. But the difference is that now there has been significant evolution in that now the technology has been proven and evolved, and in fact, people have many choices around technology, which they did not have a couple years ago. So, many choices around technology, plus the technology itself has been proven to be able to uphold trillions of dollars of value and incredible amount of transactions over the past decade with resilience and security. The second thing is institutions have now been educated on blockchain, have done all their blockchain projects in the past decade. So now something that was very novel and new is something that is better understood by both institutions and by regulators. And then thirdly, we are now moving into actual commercial application as opposed to just prototype and pilot. So, when you ask me about what we're seeing, Apollo has tokenized one of our private credit strategies, and we're actually seeing real demand. So, we kind of started working on it last year, launched it this year, and just wanted to test the market to see what would be there. And then in just a few months, we've already had commitments of a few hundreds of millions of dollars, which, by the way, in the larger scheme of things is quite small, but from a blockchain tokenization of real-world assets perspective is the largest private credit fund that is on the chain today. And so, and the demand keeps increasing, and the use cases keeps, sort of increasing. So, and I've been kind of seeing that, I think that this is the inflection point, accelerated by all of the capital that is sitting in the crypto ecosystem. In terms of like investor base, there is a lot of crypto native capital or blockchain native capital that exists, the $4 trillion, like the 300 billion that's in stablecoins, that is interested in being invested, interested in yielding strategies that are scalable and durable. And, to be honest, this is sort of like the vanguard investor set that businesses will be built on. And once that investor set, once that business has been built, essentially more of the traditional legacy infrastructure and institutions can sort of just adopt the products as it's been proven by this vanguard investor set.
Jean-Pierre, do you see the same kind of trends, and how does the European investors react to the innovation you're pushing forward with OFI?
It's also moving in Europe, but it's moving, not as speed than you can see in the US, but it's moving. The adaptation of the tokenization of assets is accelerating. The same thing you are looking in the US, where we observe the same movement. But the fact is that we need to convince institutional investors. For the time being, they are not yet here in the European market. There is still a step to go to convince them to come into this kind of access to the assets through tokenization. But we are very confident that in the next couple of months, it will change, especially through the funds. It will be the tokenization of the funds which will accelerate the movement. And not only on alternative, but also on traditional funds.
Absolutely. One thing I would like to build on together with you guys is how the liquidity of tokenized asset happens. Because you've got an asset which is a traditional fund, for example, which will get its own mechanisms of liquidity and is kind of all set. And suddenly you bring in a smaller quantity, as you mentioned, even though the numbers are big in scale of things, it's not that big, and you tokenize an asset. Some assets will be tokenized and tradable 7 days a week, when actually the underlying asset, such as equity, is tradable only 5 days a week. How do you kind of navigate this situation? Do you pick assets which don't have this kind of specifications, and how do you see the market evolving that way?
Now, the fact is that you cannot change the underlying assets. If it's illiquid, it will stay illiquid. What you maybe have to organize in the future is on how the tokens can be exchanged by themselves. So that means how you can organize a token exchange somewhere in the way the liquidity will go. But on the underlying side, it will not change. There is no miracle, no.
Are you seeing something like this in the Atlantic side of the market?
Yeah, I agree. I agree with you in that I think that the opportunity around tokenizing assets, specifically funds or private funds, is potentially the ability to create a new feature set for this asset type that conventional technology cannot provide, or cannot provide efficiently, or cannot provide at scale. And so, I agree with you. I think that some of the interesting areas to develop that, we would see perhaps in the next, year or so is what would it look like to have a secondary market or some sort of liquidity provision for these private funds, like where a private fund that is naturally quarterly redemption, as an example, can potentially enable an investor to get out of the fund within the quarter because there's someone that's willing to, buy the tokenized version and hold it on their balance sheet, as a commercial venture. Additionally, I think that there's incredible opportunity around financing around these assets.
Yeah.
So certainly, if you are, in the wealth space, you know about NAV financing. So basically, financing on the NAV of the fund product. I think that what's really interesting about DeFi, we've been experimenting with something called Morpho. What's really interesting about DeFi is the ability to use a private credit fund as collateral and enable US dollar stablecoin borrowing off of that asset in a really scalable, durable, and easy way. And certainly there's a lot of development required in DeFi, but it's just at least a proof point on how the technology can essentially offer better investor experience at scale that traditional institutions will have to put like a regulatory wrapping around and like a user experience around, but can essentially benefit from.
Briefly, Jean-Pierre, what do you see as a non-technical barriers for this asset class, tokenized asset class, to progress faster?
First of all, you have the regulatory framework.
Okay.
So for the time being, I'm speaking especially for European market. On European market, we see that for the time being, the regulatory framework is not yet at the level where we would like to be for him. And here we have to work with the different authorities in order to make them moving a little bit quicker than they are doing now.
Yeah.
And this is one thing important. The second thing is the way the institutional investor will move also. And here also maybe it will take time. And first thing, it's the role of the custodian. Because we're speaking about tokenization of assets, but at the end of the day, where will be the role of the existing custodian and how they can move themselves, their own infrastructure, in order to be able to be in this new world. And for the time being, the discussion we can have with the big European custodian is that they are more or less at the beginning of their reflections.
Do you see investors in tokenized assets having their own custody? Because most probably we're going to end up in a world where you will not get a centralized custodian anymore, in like you have in TradFi, but having like multiple ledgers and multiple custodians. Or sometimes the customers taking care of their own assets as well.
Yeah, but that means that they have to change their mind. Because for the time being, they have a gatekeeper. And the gatekeeper is responsible for the value of the assets. And in this new world, it doesn't exist anymore.
Yeah.
So that means you have to reorganize your own organization in order to make sure that your assets are somewhere.
Christine, what kind of non-technical barriers do you think this asset class, should it be at Apollo or elsewhere, is facing? And what kind of solutions you've seen to mitigate those barriers?
Yeah, I mean, I think for this technology to scale to its fullest potential, it really needs to become the technology of the banks and the asset managers as they exist today. And they have legacy systems that need to be interoperable or integrated with this new technology, with this, like with crypto wallets, with blockchain, kind of the way you interact with multiple different asset types on this infrastructure. Like that takes some engineering work. It takes a lot of operating model change. That takes a lot of change management behavior. And so, I think that will take time. So whilst I said that we are accelerating towards like the tokenization of real things, I think in reality, like there will also be kind of a longer tail of adoption that will take time as larger and larger institutions sort of get into the space in a real way. I think what is really exciting that I mentioned is that we don't necessarily have to wait for all of that to happen. There are certainly a next generation of investors that want to be on chain. They want to use their crypto wallets. Their first investment was probably Bitcoin or probably some on-chain investment. And these are going to be those that inherit generational wealth and also become the future leaders of the future world. And so what's really interesting is I think there will be a parallel path of developing products for, essentially on-chain native investors that are digital first and probably AI first as well. And then there'll be, another path of like, how do you get everybody who is already, kind of invested through existing systems onboarded. But really what's going to make the point is if the on-chain experience is at least 10x better than what they can get today. Sure. No one is going to move to your tokenized solution if it's just about the same or perhaps even worse, which is sometimes what happens in blockchain because the user experience needs some effort, and I think that all of the thinking and the engineering has been focused on the back end, on the blockchain technology part as opposed to the user experience. And so it's really incumbent upon us who are actually building these blockchain solutions to make sure that we are building something that is supremely better than what you can get today, that your assets actually do have the superpowers that we are hoping for or promising than what exists today. Because otherwise, really no one's going to change, because when we're talking about mainstream adoption, no one cares what kind of blockchain, what kind of ZK, what type of consensus you have. They just really want to know, is this going to make my life easier? Am I going to be able to earn more? Am I going to get great investment returns? Yeah. Can I operate more efficiently? And how do I live my life better? How do I save and invest and retire better is basically what everyone's after.
But don't you think that the adoption will be easier with individuals rather than with institutions?
Probably. I mean, as we've seen in broader crypto, it has been the individual that has, sort of forward leaned into it, that has actually caused institutions to take notice. So I think that specifically in this particular technology, it is very accessible. And so, I do think it is the individuals that will lead the way.
Is the solution to all the challenges we are listing here, is the solution coming from stablecoin? In my opinion, stablecoin are essentially the godfather of RWAs being tokenized. And we see them going at full speed in the US. Europe is still debating CBDC or stablecoin, but I think stablecoin will win, and private money is better than public money anyways. Do you think all these adoptions and kind of demonstration of the value of the tokenized asset will come from stablecoin? Yeah. And will this kind of bring this flywheel into motion and eventually adding the people to experience a US dollar on-chain, thinking maybe getting yield back or getting just instant finality, and thinking, oh, I can get stocks or I can get funds also this way, and I can start to use Morpho. But I think as for many people in crypto, you start your journey with stablecoin to acquire crypto. Maybe the next wave of users are coming from stablecoin. I'm curious of your views. We only have 2 minutes left, but is the gateway to tokenized assets actually stablecoins?
Yes, definitively, I believe it. Because the stablecoin is the way of payment. So to go into any assets, you need a way of payment. And with a stablecoin, it will go that direction. And the fact is that the US is, as usual, much more advanced than Europe, and you can see that in the US market already.
Hong Kong is active as well, yeah.
And Hong Kong is also active in that way. But in Europe, we are waiting for that. And this is only...
Just do it, Jean-Pierre, just do it.
Well, I cannot do it by myself. I need an ecosystem. And the good thing is, hopefully, a set of European banks are going to launch a stablecoin. And then maybe it will accelerate the process in Europe going into this direction.
I think, yeah, I agree. So I think that it certainly is the major enabler. Any sort of blockchain-based payment, whether it be stable coins or depository coins or CBDC, that is certainly what you need to get into the investments. I think that over time, though, what people will realize is that the killer use case for blockchain is not necessarily operational efficiency. Yes, you will get that automation for sure. DVP, nobody knew what that was before blockchain, but it turns out it's super important. I think in reality, the killer use case for blockchain is being open architecture infrastructure where multiple different asset types can coexist and be programmable.
Yeah.
Right? Yeah. And I think that that is the real killer use case in Unlock. Nobody talks about it right now because nobody knows about it right now because we've been so busy trying to just get the assets on the chain. But you can already see between dollars on blockchain through the depository coins or the stable coins, treasuries and money markets on chain, now private credit that Apollo has tokenized, real estate that has been tokenized, public equities, specifically in the US, but in other areas. Like, this is the composition of a total portfolio, a total balanced portfolio that anyone would typically have. And what have we learned that smart contracts is best at, especially in DeFi? Rebalancing different types of tokenized assets. It's just that in the context of DeFi as we know it, it's all been crypto assets. But now you take all of the different assets that are on chain today and you apply DeFi, use smart contracts to rebalance it. What do you get? You get an automatically rebalancing total investment portfolio that can be designed just for you, for your savings and retirement goals, for your risk profile, at scale, regardless of if you have hundreds of millions, tens of millions, thousands, only hundreds, maybe just less than 100, the technology works just as efficiently across any size, against any jurisdiction, 24/7, 365. So I think that this is actually going to be like, what the major unlock for blockchain, everything that we've been working towards for the past decade will probably be around delivering this total portfolio of multiple different assets efficiently and effectively for everybody in a personalized way.
DeFi needs a unique value proposition to differentiate itself. If it's only digitalization, it's not going to go so far.
Right.
Ladies and gentlemen, thank you very much for your attention. Christine Moy and Jean-Pierre Grimaud, thank you.
Thank you.
Thank you.
Thank you.